Next up, we're diving into a fascinating and frankly somewhat painful retrospective. We're going to talk about those stimulus checks from the pandemic era. Specifically, what would have happened if, instead of spending that 1,200, you had invested it. It feels like yesterday everyone was debating whether these checks were a lifeline or, well, a bit of an economic overreach. I remember distinctly arguing with my brother-in-law about this over Thanksgiving in 2021. He was convinced it was going to ruin everything. Turns out, he wasn't entirely wrong, huh?
Well, that's topical. It does feel like a recent memory, but also feels like ages ago. I remember getting the check and honestly, just feeling relieved at the time. Like, okay, maybe I can catch up on some bills. I hadn't really thought about investing it. That sounds smart in hindsight. So what are we looking at here? What if you had invested that 1,200 back then?
Right. Let's rewind to March 2020, when 200 stimulus checks started hitting bank accounts. Now, let's say you were a bit off Aristaker and put that money into Bitcoin. Back then, Bitcoin was trading around, roughly 500 a share. Each terabyte gets you about 0.18 for 6 BTC. Fast forward to today, May 17, 2024, Bitcoin's hovering around 67 0. That zero, each by 46 BTC is now worth. Hold on while I crunch the numbers. Roughly 12,379. You've more than doubled your money.
Huh, seriously, over double. That's a huge difference. Okay, Bitcoin's obviously done well recently, but was it just luck or did people see that coming in 2020?
It wasn't pure luck, but there was definitely an element of speculation. There were folks who believed in the long-term potential of crypto even then, a small but dedicated group. But let's be real, nobody predicted this kind of surge. Now, let's look at another option, Tesla. In March 2020, Tesla stock was around 75 a share. That 1,200 would have bought you about 16 shares. Today, those 16 shares are worth approximately 38,400. Again, an absolutely phenomenal return.
$38,000 from 1,200. That's insane. So everyone should have just put their stimulus checks into Tesla or Bitcoin. Why didn't they?
If only it were that simple. Risk tolerance plays a huge role. These are volatile investments, and many people weren't willing to take the chance. Plus, there's the market issue. You have to buy low and ideally sell high. Now, let's look at something a little more diversified. ARKK ETF, which is an actively managed fund focused on disruptive innovation. In March 2020, it was trading around 41 a share. Each hour buying buys about 29 shares. Today, IRKK is around 56. So that's roughly 1,624. Still a gain, but far smaller than Bitcoin or Tesla.
Okay, so diversification helps, but it doesn't give you the same explosive growth. That makes sense. It's like the article touched on how these stimulus checks were meant to help people in need, and I think most folks just use them for rent or groceries. Investing wasn't exactly top of mind for a plot of people dealing with job losses, right?
Exactly. And that's crucial to remember when we talk about these ifs. The stimulus did help millions avoid poverty and keep the economy afloat, as the article points out. But it also injected a massive amount of money into the system at that time, when supply chains were already struggling. This is where things get tricky and ties back to that inflation problem. Now, you touched on something interesting, how feast checks ended up fueling the meme stock bull like GameStop.
Yeah, I remember that. It was all over the news. People talking about and read it. It seemed crazy at the time. How did the stimulus checks play into that?
Well, think about it. Millions of people suddenly have a little extra cash in their pockets. They're stuck at home scrolling through social media. And there's this growing sentiment against Wall Street. The article mentions how even policymakers initially thought giving too much money was the greater risk than too little. This created an environment ripe for speculative trading, especially with these heavily shorted stocks like GameStop. People had time on their hands, a bit off disposable income, thanks to those checks, and they were looking for something exciting. A way to stick it to man.
Ah, so the stimulus was like fuel on an already existing fire. I remember my cousin telling me about putting some money into AMC. He made a little bit, but then lost it all pretty quickly. It sounded like a gamble more than anything else.
Precisely. And there's fascinating research coming out of Harvard Business School analyzing the market response to the stimulus checks, specifically how they impacted trading activity in these meme stocks. Their analysis shows a direct correlation between the timing of the stimulus distribution and spikes in retail investor trading volume. The article kind of alluded to it, but it's really quite striking when you see data. It wasn't just about having money. It was about when people received that money and what they did with it during a very unusual economic period.
Wow, so it wasn't necessarily that the stimulus checks were inherently, but rather the timing and context of their distribution created some unintended consequences. That's actually really insightful. It kind of makes you think about how complex these things are. I mean, it sounds like there was a plot of political pressure to keep sending money out even when economists were starting to worry about inflation.
Exactly. The article highlights that brilliantly the politics of stimulus. There was a real fear of repeating the mistakes of the 2008 recession, where some argue that too little stimulus belonged the recovery. And then you had the Democrats wanting to win those Georgia Senate runoffs with promises of 2,000 checks. It became less about economic necessity and more about political expediency. A fascinating case study in how good intentions can lead to, well, a complicated outcome.
So what do we learn from all this? I mean, beyond the obvious in Bitcoin, if you get our stimulus check joke,
A very good point. It's not about predicting the future. It's about understanding the interplay between economics and human behavior. We need to build more robust social safety nets before crises hit, so we aren't scrambling to distribute billions of dollars during a pandemic, hoping it reaches those who truly need it. And maybe, just maybe, politicians should listen to economists a little bit more even when it's politically inconvenient. It's all about balance, right? A lesson learned the hard way, and one we may very well have to relearn again someday.
that makes a plot of sense. I came into this thinking those stimulus checks were just a good or bad thing, but it's so much more nuanced than that. It's kind of scary how easily things can go off the rails with something like that. And also kind of amazing to think about what could have been if I had just taken Ankins on some Bitcoin back then.